Hey, this is James Pelton coming to you today. How's everybody doing today? As people are kind of hopping on, just go ahead and hit the like button. Um, so it looks like we may have another no-show, and I do just want to highlight this came up on the live yesterday, but this was a free AMA. I just liked. Oh, there Grant's here. Awesome, just in the nick of time. All right, let me bring Grant on. Grant, I'm glad you can make it, brother. I was afraid it was going to be a no-show. Awesome.
No. Happy to be here, man. Thanks for having me.
Awesome. Well, so happy that you're here. I was trying to think, what am I going to do to fill the time instead? So this is awesome that you made it. So audience, thank you guys for joining me for another AMA. We have Grant here. He's the head of Crescent Crescent. That's how you pronounce it. I always have to double check. I read so many words and you're not sure how to pronounce them. But I'm excited to talk about this one, talk with Grant about what he's building. So if you're in the audience, what I need from you guys might know the drill if you've checked out other AMAs, but I need you to hit the like button. Again, that's what tells YouTube, hey, this is good content. Don't hit the dislike button. That tells YouTube it's not good content, and that might be common sense, but please hit the like button. And then we have a question of the day. And my question of the day, I went to the Lancaster County Fair last night with my family. What's your favorite carnival type food? Okay, that's my question for the day. Okay, and I am genuinely curious about that, but it's also a way to trick the YouTube algorithm into getting a lot of comments. Okay, so and we got people hopping on. Jarek says, "Is that Tom Holland?" And Grant, I don't know if you get that a lot. You do have a similar look to that.
Oh, jeez.
Have you gotten that before, or is this first time?
A decent amount. The team rags on me because every time we travel together, that's a common.
That's a common thing. All right, yeah. I went down to Mexico, and I'm told I look like Canelo, the boxer. Everybody down there was saying Canelo. I think they're just not used to redheads. So
that's hilarious.
Anyways, yeah, people hopping on, so please hit the like button. Grant, welcome to the channel. I'm super happy to have you. Could you start by just introducing yourself?
Yeah, absolutely. Grant Roscoe, founder CEO at Crescent, born and raised in Lincoln, Nebraska, of all places. Not exactly a big tech hub, but a fellow Midwesterner, Mr. James. So my background, since I was an early kid, I guess about 13 is when I got into business. I started building e-com stores, working with international manufacturers, sold products all across the U.S. Through just online communities I was a part of. It led me to discovering foreign exchange trading when I was about 15. So 7-8 years ago, got super active into it. Was very profitable in that endeavor, which led me to discover crypto. 2017, got my first Bitcoin at about 1,000 a pop. Transitioned full time because I fell in love with the ethos of this global financial system that was more equitable, fast, efficient, cut out a lot of the incumbents. So I went in full time initially as a trader. Then I had a lot of friends and family here in Nebraska. Of course, there was the 2017 media hype cycle. Everybody wanted to buy crypto through Coinbase. They didn't know what coins to buy or when, so they were coming to me for that insight. So I spun up a little fund and was managing capital, which I wanted to scale more efficiently. So that was the founding story of Crescent, was that we wanted to create a mobile product that was the simplest way to invest in crypto. We've evolved quite a bit since then. Started the company at the height of a bull market, followed by a 2-year bit of a winter. So tough timing, but went all in with my personal assets that I'd made from e-commerce and day trading, cashed in my college savings fund, super extended. And now we find ourselves in a fortunate position. Catching you up to today, we're a cash management product, happy to go more into it. For businesses, we've raised about $10 million, have 15 full-time teammates, very senior engineering team from some of the biggest tech companies in the world, like Nubank. They worked at NASA, Fortune 100 companies, et cetera. So awesome. Very, very, it's a pleasure to be here and have survived a couple dark times in the market. So.
Yeah, no, it's awesome to have a fellow Nebraskan. That was one of the things that made me want to bring you on, was it's like, hey, we don't have a lot of projects. This might be the first project that I've had out of Lincoln to come here. That's where I'm actually in Roca, so just south of Lincoln a little bit. But awesome to have you. And yeah, I think a consensus among the chat is I'm Tom, Spider-Man. That's the takeaway from this AMA so far, is that Tom Holland is secretly a crypto guy in Lincoln, Nebraska.
That's hilarious. Well, whatever
awesome.
gets the comments running through for your algorithm.
Hey, there you go. You know how it works. In retrospect, I should have made that the in AMA with Tom Holland. Would have been good.
Okay.
So let's talk about what you're building here. Can we talk about, well, how about just first an elevator pitch of kind of like if you were coming to brand new people, these are brand new people.
Sure.
How would you kind of sum up what it is that you're trying to build?
Yeah. So, I mean, a little just TLDR is that we've evolved as these markets change. We've built our tech stack to be whatever it needs to be for our customers. So we were initially a retail facing product that was like a high yield savings replacement. We're very good at distribution there. Earlier this year, we went from 0 to 23,000 plus waitlist signups in about a month and a half. And we're going into private beta, had awesome metrics. And then the BlockFi news came out about their SEC filing. We've been tracking that for almost 8 months and knew that that was a very likely outcome. So we were hedging. And we had a lot of our cap table, high net worths, business owners that wanted to have higher limits on the product and wanted a business focused account. So we started building that before the BlockFi news even came out. And when that news came out, we were able to pivot on a dime and now be this cash management platform built for businesses to save time, reduce friction, and earn more money. So all the finance teams that we talk to today know that effective cash management can help take their businesses further and faster. But a lot of them are bogged down in the day-to-day minutia of daily operations, compliance, new initiatives, but they don't actually have time to allocate to a cash management. And so Crescent today is a platform that empowers these finance teams to deploy their ideal cash management strategy in minutes versus months. And we do that effectively by bridging them into high yields across every asset class, be it FDIC insured banking accounts, all the way through digital asset lending. We cover the full gambit of yields and risk profiles. So we're your one-stop shop to deploy cash effectively. And because you link your bank accounts to Crescent, we are also able to analyze historical transaction data, show you trends month over month, year over year. We call that earnings insights. And then lastly, we have smart rules, which allow you to automate transfers, the day-to-day operations of moving money across the business. And we're able to automate a lot of that. You can set if-then triggers, a lot of cool things. So in short, that is the umbrella of cash management today that we find ourselves in. We have a lot bigger plans for the future that I'm happy to go into later, but that's the elevator pitch.
Awesome. Yeah. And for people just hopping on, please do hit the like button. If you have questions for Grant, please ask, and I'm happy to bring those up and kind of get some eyes on this. So I was really interested in this too. I used to run my own business, and I loved the tagline at the top: transform stagnant company cash into earnings for growth. Because we would at any given time have, $1 million sitting in the bank,
Yep,
not doing anything, and we couldn't invest it because we needed it. But so can you kind of talk about how that works? Like how quickly, if I have $1 million in the bank for my business, am I able to just deposit that over, start getting this 4% APY? And is that a constant? And then how quickly can I get liquidity back? And can you talk through some of those details?
absolutely. Those are great questions. Some of the most common ones in every meeting that we have is how fast can we get this deployed and how much friction does this introduce to my life? Because that is the common conception when you add another tool to your financial arsenal, that it's going to increase the amount of time you have to spend in the day-to-day. Our goal is to actually reduce the time you have to spend. So getting up and running takes about 10 minutes. You create an account, our compliance team approves things same day, and you can link your bank accounts right away. When you have your accounts linked, we charge no fees to deposit via ACH, wire transfer, or USDC. So it's in and out, same day settlement. And if you want to withdraw funds, let's say, James, you have $1 million of idle cash, you want to keep $250,000 in your bank just for emergency scenarios, we can in one click sweep that excess $750,000 into Crescent, earning 1%, 4%, a mix of both, whatever you want. And across all of our products, we have next day liquidity, meaning if you submit a withdrawal anytime before midnight today, you will have it back in your bank account by tomorrow. So we have a lot of cash on hand to handle that. We have lines of credit with partners, et cetera, so that we can guarantee that liquidity, which is very important for the businesses that we serve.
Okay. And what kind of risk profile would you give this? Money in the bank. If we say that's a 10 out of 10 safety, or maybe 9 out of 10, because that's not totally safe. Like how risky would this be compared to that? I think sometimes with like what happened with BlockFi and things like Celsius, people are concerned, like, is it worth putting my $1 million up for risk for a 4% APY? Do you want to talk through that?
Absolutely. So we are different in the sense from a BlockFi Celsius. I'll go into how we differ on the lending side with digital assets, but also the platform itself is different in the sense that we have traditional yields as well for those that don't want to touch this new space or want to dip their toes over time. So that's why we have a 1% FDIC insured product that knocks out of the water typical incumbent banks for businesses today. It's not going to blow up the business in terms of earnings, but it's something, and it's a lever to pull for effective cash management. But on the 4% side, we do lend with that capital to digital asset companies, the biggest exchanges, funds, etc. But unlike what a Celsius, Voyager, BlockFi do, they do under collateralized lending, meaning to borrow $100 from their customers' deposits, the borrowers in some cases are posting up zero in exchange for that, which is a very high risk practice. Even banks rarely do that. Banks today typically lend against assets, be it homes for mortgages, cars for car loans. So there is some form of collateral that they can recall in case of repayment is missed. Where in the case of a Voyager, for example, which I just got a letter in the mail a couple of days ago about their Chapter 11 bankruptcy, they did a unsecured loan with zero collateral to, everybody knows in this chat, 3 Hours Capital, a formerly very large hedge fund. But that practice of unsecured lending, though it can earn you higher yields, it comes at a cost of safety of those funds. So we chose on the risk spectrum the most conservative side possible, where we have, it's called over collateralized lending, meaning for every $100 that you want to borrow from Crescent's customers, you have to post up at a minimum $150 worth of digital assets, which in this case, we accept Bitcoin through our lending desk partners. And so we have, as of this morning, we had about 172% collateral on the books. We've had zero defaults over the history of the lending practice. And so on that 10 out of 10, on the 1 to 10 spectrum that you mentioned, James, nobody can't say it's 10 out of 10 because it's not insured. It is covered by collateral that far exceeds the value of the loans. We work with top tier partners with the deepest liquidity in the industry to sell on the way down if we need to, if margin calls are not met. So I don't know. I've never gotten this 1 to 10 scale approved by council, but I would put it pretty high up on the spectrum. We simply don't foresee defaults in this portfolio. Now, we will bridge into higher yielding things with higher risk over time, but that doesn't make a great cash product for businesses because they have to preserve capital. It's their lifeblood.
Right. Okay. And we have a couple questions from the audience, and I actually had some of these same ones. First off, love the website UI, and I agree. It looks really nice, and that's super important, especially for like business to business products. That's one of the first, when people go to the website and they don't like the looks of it, they just leave. And it seems like a silly way to make your decision, but it is how we, it is where we're at. It's kind of like marrying your wife just for her looks, maybe. Second question we have is why name it Crescent? I don't know why I have a problem with that word. I keep wanting to say croissant. I think I'm hungry. But why name it Crescent?
Yeah. We have a couple of Polish teammates that also pronounce it croissant. So.
Okay, good. I'm in good company then.
Yeah. The name Crescent came for two reasons. On the personal side, my mom used to be a freelance designer under the name of Indigo Moon Design. She had a crescent moon in the logo, so I think I was subliminally attracted to the mark. That's a little homage to her. And then on the business side, it is, a crescent is a lunar phase of the moon, which is like transitioning on the moon cycle. And it's sort of a metaphor that Crescent wants to be that transition from traditional finance into a more digitally enabled global financial system. And so it's that same transition concept. That's where the name came from.
Okay, gotcha. And Shola says, over collateralization just makes sense. It's amazing. Voyager, Celsius, and alike did not insist on this. So well done. And, over collateralization is maybe the difference between a 4% APY and a 9% APY.
Exactly what it is.
So, I mean, that's kind of why Celsius went that direction. But it's, and it seemed when we were in the bull market and everything was going great, it seemed like, oh, this is great. And so actually the bear market's probably good for you guys because 4% that's safe is better than 9% that you lose it all. So, yeah, that's my take on it. Another question that came up is, are there minimums? And along with that, I was wondering if there are maximums. I have a project that I'm thinking of that they have 9 figures of Bitcoin that they just hold in reserves. Wow. I mean, is that something that you're able to handle? Is there minimums and are there maximums?
That's a great question. So on the FDIC insured product, there are no minimums and anybody can sign up and use that product. On the 4% side, for compliance reasons, we filed that as a security with the SEC or registered it as one. And so we check what's called accreditation status. I'm sure a lot of the folks here are familiar with that, but that's very common when you make private investments into entities, startups, whatever it may be. In this case, we work with businesses that have a net worth on assets that exceed $5 million. On the personal side, it's a net worth that exceeds $1 million. So to access that 4% yield, that is the threshold that you have to meet. So FDIC, though, to summarize, no minimums. Anybody can access the 1% side. And on the 4%, only accredited folks. And on that product, we don't currently have minimums. We're probably going to put in one for about 100,000 just for a threshold matter. And on the maximum side, James, because we are one platform that bridges into partnerships on the back end across every asset class, we're in a really fortunate position where we don't have maximums because we can diversify across desks. We can show you, and we do, exactly where your funds are going, how it's being used, and we work together with you to put together a plan that makes sense, spreading across traditional assets, digital assets, whatever you want. And yes, we support yields on crypto, cash, et cetera. We just don't market the crypto side as much because we want to bring in traditional businesses, which fortunately we've done successfully. So.
Okay. Well, hey, we'll have to connect about this. Do you have a referral bonus if I bring on somebody?
You, James, we'd have to chat because you would get a very sweet one. So.
All right. We'll talk about that here in a little bit. And Austin, he's a big, he's real estate guy, but one main thing I think a business would choose 1% versus 4% is the FDIC insurance. What insurance would be available if something were to happen as this is company funds? So is there any type of insurance on the 4% or is it just the FDIC on the 1%?
That's a great question. Probably the most common one we get asked, frankly, when the 4% people think it's too good to be true. But the reality is this opportunity exists because banks don't recognize this form of collateral. And so there's an imbalance of borrowing demand to suppliers. So we work with very progressive partners that are willing to extend that credit to the benefit of our customers. But on the insurance side, there is no formal plan today. We cover it with collateral and what's called like a secured debt security, essentially. This is a fully secured instrument. One thing that we're now spinning up is bankruptcy remote entities, which means that you as a depositor on Crescent into this particular yield will have direct claim to the underlying assets that back that. So Crescent will be taken out of the picture, meaning you have direct claim. So it's a form of sort of peace of mind, where in the case of Voyager or Celsius, you deposited it there, total black box. If they go under, your assets go to their bottom line to pay off a lot of their debts. In this case, that would be totally put on its head. So that's something that I can't go too much into because we're spinning it up now. But that will be the closest form of insurance and peace of mind that we can give to businesses today.
Okay. Of your existing customers, would you say that most have been choosing the 4% or have most been choosing the 1%, or is it kind of a 50-50, or how's that worked with your existing customers?
Certainly. So we went to market with the 4% initially, and we were seeing good deposit sizes, but knew that it would be a better long-term play if we had a more conservative foundation of that 1%, which is where the idea came from with the FDIC insurance, which allows us now per customer to have a whole lot more assets compared to just the 4%. But to answer your question, the 4% is definitely more popular. Once they understand the risk profile of it and the fact that it looks and feels like a typical deposit in a money market, etc. Though it's not called that, it's very similar. That's where we're seeing the most demand. And interestingly, I think this audience will find it unique that we're not just serving crypto companies. Being founded in the Midwest, we have a lot of relationships and a lot of investors on our cap table that own very traditional businesses, and they are choosing to deploy funds on Crescent. One other thing is that we're not trying to replace banks, which puts us in a good position. Midwesterners in particular have super deep relationships with their banks. And so we want to complement that relationship, be an effective place to store idle cash, but keep your bank relationship. So most of our customers, to be honest, are coming from the Midwest, traditional corporates, and we're the first crypto type service that they've ever even thought of touching, which is pretty cool.
Very cool. Yeah, that it is. Because I think a lot of companies would like to get in. They'd like some crypto exposure, but they feel like, oh, it's too risky. And so this is kind of a good way to bridge them in. I have a ton of questions just from my past business. I'm just thinking through. Well, one thing is the 1% and 4%, is that going to be pretty constant, or does that move? Because I know like we would use Ally Bank, which sometimes we would get like a 1.7% APY at times. But then at times it would be like a 0.2% APY. And I don't even know what affected that rate. But it just was totally, is yours guys is 1% and 4%? Is that pretty constant?
Good question. So, I mean, the markets change very quickly. On the 4% side, I can say more confidently that we chose that rate because it is stable, predictable. Now, in the terms and conditions, it's of course a variable rate. It's subject to change if market demand on the borrowing side comes down. But currently, our outlook is very strong. That's a sustainable rate for the foreseeable future and quite some time. On the 1% side, it's a personal opinion, not any advice or anything, but we think interest rates are going to continue to rise to try and seize inflation. That's a lever that they pull to do that. And so that 1% ideally comes up over time if effective Fed funds rate from the Fed goes up. So we could see that touching 1.5% in the coming future. It's totally dependent, outside of our control, but we want to be very competitive on that front to get as many assets flowing through Crescent as possible. And we don't actually really monetize that one. That's just a do good product on our platform. So yeah, we want to pass as much margin as possible on.
Okay, gotcha. So then another question I had, and I'm just thinking out loud here. So if we can maybe talk about this some other time if you'd like to, but so one thing that we did in one of my previous businesses is at the end of each day, we would basically deposit all of our, so we would use our money through the day, deposit it at night, and then just to get the little, I mean, it was hardly anything, but when you're doing, 9 figures, 8 figures, there's, a significant amount where we deposit everything. And then in the morning, we would kind of take it back out. Do you guys have like anything? It would be so nice if there was something automated that did that. Is that something that you guys have looked at, or I don't know? I'm just thinking out loud.
I'm giving it away because I'm smiling so hard because you are opening up a very fun topic that we're super bullish on. This was inspired actually a few months back. We have a friend on the coast that has a lot of grocery stores, traditional retail type business, does 9 figures in revenue per year. And they used to do a very similar thing that you just described, called a sweep program, where they sweep idle funds to their bank on a nightly basis, on a weekend basis, whatever it is. Though it's incremental gains on your dollars day over day, one, you're not using the money then anyway, so you might as well put it to work. And two, those incremental gains add up over the course of a year for businesses at scale. That's just bread and butter profit that you can add to your bottom line. So that sweep program concept is where the smart rules really thrive. We leave that name intentionally pretty broad because it can be whatever we need to be for our early customers. We're already today setting like minimum thresholds where they just have to have a certain pocket of cash in their account, but anything that exceeds that balance, let's say $250,000 in their account, they will sweep those excess funds to Crescent. If their balance dips beneath that $250,000, we automatically transfer funds back. And on the case that you want to just sweep the full account in and get it back by the next morning, we're building that as well. So you will be able to squeeze out every bit of margin on your cash possible in a fully automated fashion. Very
cool. Yeah. And when you're talking like, 9 figures, that can really add up quickly. I mean, if you're doing $1,000, then obviously, that's not going to be worth the hassle. But when you're talking about big businesses, Very cool. And I want to take a couple questions from the audience, just so I don't hog all the time. I have so many questions about this. But what are the specific key assets that you hold?
Yeah, so today we work with businesses mostly on cash in and cash out, so they can link their accounts. I mentioned we have 3 deposit methods, 2 of which are the most popular. One is ACH, one is wire transfers. We charge no money, no fees to receive or to send any transfer method, just for context. But those 2 for traditional businesses, ACH and wire transfers are the most common. When you are on Crescent, however, you have free access to USDC. We allow you to earn in crypto if you want to. So you can deposit cash as a business, earn your interest in Bitcoin or Ethereum or USDC, whatever, and have same next day liquidity on those funds. So we want to be asset agnostic. We'll support whatever our customers want. But today it's a pretty focused set of US dollars, USDC, Bitcoin, and Ethereum. Those are the 4 main assets. We have the ability to earn interest in any crypto possible. That's just no business has requested that yet, so we haven't built it.
Gotcha. And then is this product available worldwide, or is it only US or US and Canada?
Currently USA for now. We are working on Canada and Europe would be next. There's some crafty things we're doing with partnerships plus compliance. I mean, we will only go into jurisdictions that we can be 100% compliant in. And here in the US, they have very black and white securities laws, like bankruptcy remote laws, everything like that. So that's why we're very confident here. But yeah, we certainly plan to open this up worldwide where we can accept any business, any jurisdiction possible that we can. So yeah, that's hopefully by early next year. I would give that the timeline.
Okay. Yeah. And actually, you're doing it being in the US, you're actually doing it the opposite direction of most, because usually the US has the hardest regulation. So most people start, in the Europe countries that have really easy regulation, and then they come to the US eventually once they can figure stuff out. So you're kind of doing the hard one first and then move into the easier. So I think you won't have any problems with that for sure. And then I want to talk about too, is this available for individuals, or does it make sense for individuals, or is this kind of business only, or what do you have available for individuals?
Certainly. So we were in private beta with, I mentioned the very successful consumer product. We had a private beta mobile app you can download. We've since taken that off the App Store. We still have it supported. It's up to date with all the products. But we can today, under the new structure that we're proceeding with, we can accept individuals that are accredited, meaning you have a net worth of $1 million or your annual income exceeds $200,000. So yeah, we're not marketing that. We currently can do it. The reason why businesses differ a little bit from the personal side is that you have full discretion over where you want to put your own money. But on the business side, when you're working with finance teams, I mean, they have a fiduciary responsibility to a board. I mean, their job is on the line. They view risk a whole lot differently. So that's why all these consumer products like Celsius, Voyager, et cetera, could market these higher risk, higher yields to consumers, which is pretty unfortunate because now they're holding the bag and they're the least equipped to do so. But yeah, to answer your question, consumers, individuals that are accredited can access the product, and we will onboard you with the same services as a business.
Okay. Is that the same thing when I noticed down at the bottom there was a for individuals. Is that what this product is?
Yeah, this is a really fun landing page, but this is the one where we launched to consumers that were non-accredited. We just left this here because we have the 23,000 plus person wait list that wants this product, but it's not our current pursuit. But yeah, I mean, we plan to be consumer facing again in the future. Just there's such a massive market opportunity for us on the B2B side that we want to be the dominant player. And over time, the tech stack that we have, and as regulation matures, we'll be very well positioned to cover every vertical, every sector, every geography. That's the ultimate vision. But
okay,
this was a product.
yeah. You only have limited amount of, you can only focus on so much. So I think there's like a huge opportunity here, but you're right. I think on the business side of things, that was the first thing I saw that I was like more interested in. But obviously it's funny too that, Celsius And those types of products that are not as safe are available to regular investors. But when you offer a product that is a little bit, it's safer and more regulated, but then it's only available to accredited investors. And it's kind of wonky how the whole system works. Like, it doesn't make a lot of sense to me.
Yeah, it's under the guise of consumer protection, which is a net positive, but it does come at the unfortunate, like the shadow side is that you don't get access to a lot of the good things. And the Celsiuses and Voyagers that do terrible risk management, to be candid, those are the ones that ruin the fun for the rest of us, because we can no longer do that type of product. And to be totally clear, we could have proceeded with the consumer product. It just would have been a very short-sighted business move. We would have been struck down at some point, especially now that Celsius Voyager have come way down, crashing to earth. There's going to be some serious regulation movement, in our opinion, from the SEC and from other regulators. So we're very fortunate that we navigated away from that. We hope to come back in the future, but we need regulatory clarity before we'd even consider it.
Yeah. No, it's always, accredited investor status has always been, it's one of the things I hate most about traditional finance, because I would get these killer deals, 25% APY on like with super collateralized loans and stuff, things like that. And it's like, but you have to be accredited. I'm like, oh, so only rich people can get the really good deals. And so, yeah, it's just unfortunate how things are set up, but it is the world we live in.
For now, hopefully it evolves into some sort of financial literacy test where you get approved and you can take that with you to any product. That would be an ideal world, in my opinion.
Yeah. Or you kind of just, I don't know. I'm kind of a believer in just like letting people do their thing. It's their money, like let them do what they want to do. And then people learn quickly. That's what we're finding in crypto is people do dumb things, lose their money, but then they learn. And then the second time they don't do it. They are more careful the second time. And so anyways, we could talk about that for a long time. But Slash would like to know, how large can your business scale? Is there a limit to the funds Crescent can take before the APR APY gets affected?
Good question. So, I mean, it's not to infinity. I wish it were. There is our yields are generated by supply and demand. I mean, basic economics of people that want to borrow cash. We are a supplier of cash, and they are willing to pay a certain rate. If we have an influx of deposits, that rate at some point will come down. That number today, fortunately, is measured in the billions of dollars of short-term deposits that we would take on. If this is further out you go on the time scale, the less the rate is affected. If you have just an influx of $2 billion tomorrow, we won't affect the rate, but over a month, 2 months, we will have to average that out over time, if that makes sense. How large can this get? I mean, credit markets on a global scale are $1 trillion industries. There are very large asset managers that run 9 or 10, 11, 12 figure books in this world. So how big can this scale? Well, considering we are blurring the lines across every asset class, I mean, I want to say that there is no limit, and we would just, every business has cash. We are in a very good position to be the epicenter of that cash management. So yeah, I don't even have a ceiling to name, frankly.
Gotcha. Yeah, you'd figure it out when the money came, for sure.
Yeah.
And Matthias would like to know, would this be on the left side of your spreadsheet? So for those of you who don't know, I have kind of like this risk. Basically, how I look at my finances is I have like these super degen plays that make like 40% a month. And then I take the profits from those and move them to safer things and move them to safer things and move them to safer things. And so, yeah, if we were going to put this somewhere, it would come over here because it's 4% APY is like 0.3% monthly or something like that. Is that about right? Yeah. So it'd be over here. And to make 20,000 a month, you'd need like 6 million probably, if I'm doing my math right. I'd have to run the numbers, but so basically, yeah, I would put it over here where it's more like a savings account, a high interest savings account. Yeah. But again, if you're looking at it as an individual, only available right now if you're an accredited investor. So more targeted towards businesses for sure. So to answer that question, can I ask what does your profit look like, and how do you make money, and how does your business and your funds kind of fit into this? Your venture capital that you took, how are they getting paid back? Can you talk through that?
Certainly. So on the investor side, they are taking an equity stake in Crescent, betting on our upside over a multi-year time horizon, call it 7 to 10 years. They want us to go public in the future, be a very large multi-billion-dollar company, and that's how they make a return. They're not taking dividends. They get no liquidity in the short term. They're making a long-term bet on Crescent. Now, how Crescent today makes money is a spread of the yield that we bridge you into. So on the 4% side, we make a variable profit margin. Every day that changes, we to the end customer have it fixed at 4%, meaning it looks stable on your end. On our side, we have a daily variable rate of supply and demand. But that's how we monetize. And we make that very transparent in all of our materials on the platform. That is how Crescent makes money and is able to provide this service to you. On the FDIC Insurance side, we make a much smaller rate, but we do have a little bit of margin there as well. So we make money as people deposit cash. Over time, we think there's a natural evolution where people will pay for more automation, more features. That could be a software type service. We also see opportunities across financing, payments, et cetera, that give us natural ways to monetize over time. But monetization is not our core focus at the time. It's building a phenomenal product, having great customer service, and scaling what we think is a sweet platform.
Yeah, no, and it's super interesting, the difference between traditional business and crypto, because in crypto, we are very quick to look for, hey, we need revenue, we need profit, we need this. And in traditional, when you're venture capital based, those venture capitalists are not looking for, hey, what is my dividend going to be next month? They're thinking, hey, we want you to grow, 1,000x in the next 10 years or something like that. And then we'll exit with you and make a whole bunch of money. So it's just interesting, the different, ways that different businesses think. And so, yeah, very, very interesting. Let's see, Milan, I just have a couple more questions for you. Then we'll let you go and get back to building. But how do taxes work for businesses? Do you provide just like some tax form? Here's the profit they made, and kind of similar to like a bank interest statement.
That's exactly what it looks like. So we consulted with accountants on this side for statements and what they want to see. It's not rocket science, fortunately. This interest that you earn is just ordinary income for you as a business. So it's just another line item on the balance sheet over time. So yeah, we have statements that are exportable month over month, and we're adding some more functionality to export a custom time frame, anything that you want, really. We're talking to accountants for that product in particular, but full transparency into taxes, statements, everything.
Okay, so two last questions. First off, is there a way for us, non-accredited investors and passive income people, is there a way for us to like get involved with you? You don't have a token. Is there a way for us to invest also, or can we only be consumers?
Yeah, I mean, a funny tangent is that we raised our first few $1 million through a security token back in 2019, 2020, when we thought that was a massive wave. Then DeFi, NFTs took all the spotlight, money, and engineering, and that security token vision of a more efficient capital market got delayed 5+ years. It's hard, it's regulated, and so we have converted it to equity. We capitulated, unfortunately. Still super bullish on the long term of security token markets, but that was literally so that our customers, consumers, investors could all be aligned incentives, and we love that, but it just didn't happen the first time around. So maybe future, TBD. But today, how can an audience help? I mean, it's definitely through usership, through referrals. We're spinning up some more bespoke type offers for our early community of supporters, either on the high net worth side or the business side. Anybody that gets people in is a huge value add to us, and we want to compensate as much as possible, be it through higher interest rates, cash, whatever it is. We want to be good to our early supporters.
Yeah. Well, and it's nice. Yeah. Being early into something like this is you guys are able to, massage things.
Absolutely.
Where if somebody has access, hey, we have a, $1 billion company that wants to use you, you guys can work something out with them to make that happen. So definitely very cool. And then last question for businesses that want to get involved. Just come to the website and schedule a demo. Is that the best way for any business owners who are listening to get going on this?
Absolutely. So you can either schedule a demo, and that will be with myself or a teammate. We do very low pressure, just learn more about your business, how you currently manage cash, what is currently yielding, and are able to take you through a demo, everything like that. Or the Get Early Access button also leads you to a type form, which is a series of about 5-6 questions. It takes a couple minutes, and we then reach out to you by the next day. That's how you can sort of qualify to see if you're a right fit for this product. It asks you name, business, what are you? Are you accredited or not? What are you interested about the product? I think you have to answer that one before it goes on. But yeah, anyways, that either of those buttons, choose your weapon, schedule a demo, answer the questionnaire, and we'll reach out to you. But we'd love to chat.
Okay, very cool. Well, hey, Grant, thanks for coming on. I think this is really cool for me, just to see. Again, one of my passions and goals with my channel is to help bridge normal people into crypto. And this is like a gateway drug, I think, for businesses to get in, because they have so many idle funds sitting there making your 0.6% a year. And this is just a easy, safer, I won't say safe, but I'll say safer, more regulated way to get, the 4% is obviously not the 40, 50, 60% APY that you can get in the crazy part of crypto, but I think a great bridge. So thanks for hopping on. Thanks, first audience. Thank you guys for watching. Please hit like for Grant on your way out. Let him know if you have any other questions. Let him know if you have businesses that you think might be interested in this. And Grant, thank you for hopping on. Appreciate it. I'd love to I'll chat more. I have a couple businesses that I think might be interested in this. Awesome. And let me know if there's anything I can do to help a fellow Lincolnite just get the word out.
Sure, yeah. I appreciate you. You're the man. Thanks for having me on, James. This was fun.
Yeah. Awesome, guys. Thanks, everybody. And hope you guys all have a great rest of your day.